Hello everyone, I welcome you all to another webinar with Streak. In today's session, we are going to be learning about trading trend reversals. So let's go ahead and quickly get a bird's eye view of the topics that we are going to be covering today. We are going to be learning about firstly the importance of trend reversals. What exactly is a trend reversal? How can we define a trend reversal? Next on, there is some confusion about the differences between a retracement and a reversal among certain traders, especially those traders that are just beginning their trading journey and have just started trading in the markets. Therefore, we will be covering some key points, some key differential points between them so that we can better identify each one differently. We will be looking at some early signs of a reversal that are going to help us spot a reversal before it has even occurred completely, followed by the confirmation signals for a reversal, using which we can confirm that a trend reversal has occurred. We will be creating some scanners that are going to help us identify for such opportunities in the stock market throughout a vast majority of stocks. We will be using these scanners to, in fact, look for reversals themselves, followed by which we are going to be creating certain strategies that are going to be taking advantage of the concept of reversals, and we are also going to be deploying them in the live market. Lastly, we will be concluding this webinar with certain key points, some certain key takeaway points that you must remember and you must take home with you after the end of this webinar. You can also call it the summary of the webinar itself. Why is it important to learn about reversals? If we as traders can identify price reversals early on, it can help us in catching the trend very early, and therefore we'll be able to capture greater price moves, which subsequently results in greater profits. Identifying reversals can save us from the retracement or pullback trap, as we call it, which is often mistaken by traders for a reversal. And it often results in a lot of traders being stuck in short positions as well. Spotting a reversal early on can act as a warning sign in order to time our exits better when the conditions in the markets seem no longer favorable. Now, let me tell you that timing exits is just as important as timing entries, as a lack of both could lead to equally disastrous loss in profits. What is a reversal? What is the definition of a reversal? A reversal is basically a turnaround in the movement of the price of an asset of a particular stock. For example, if a price is moving in the upwards direction and it reverses and starts moving in a downwards direction, it is then known as a bearish reversal. And pretty much the opposite scenario, where a downtrending price has started moving upwards, it is known as a bullish reversal. Basically, the terminology starts off with the new price direction followed by the word reversal. The opposite of a reversal is known as a breakout or a continuation, wherein there is some buying, or there is some selling activity that is going on, some profit booking that takes place, after which the major driving forces in the market still continue to push the price upwards. If a reversal keeps going on in a direction for a sustainable amount of time, that is, if the driving forces, in case of an uptrend, if the bullish force is continuing to drive the price in that direction, then the reversal lands up forming a new trend. Let's look at some key differential points between retracements and reversals. So retracements are short-lived counter-price trend moves, wherein, as you can see in the diagram, there was some selling activity that took place after this rise in price. This is basically profit booking by the traders that probably had entered positions in the market at around this price somewhere. They are exiting their positions, some profit booking is happening, and there is not much new selling activity that is taking place in large volumes, which is why very shortly after, the bullish force takes over again and it continues to drive price upwards. So this small red line over here can be known as a retracement. Reversals, on the other hand, are most sustainable price moves in the opposite direction and are medium to long term in nature. Now, the next point, coming to the next point, the price actually continues to move in the upward direction because the market forces are still strong and will continue to drive the price upwards after a brief correction. As we discussed, the buyers are still willing to buy at a higher price. They are aggressively driving the price upwards in this case. In a reversal, on the other hand, the bullish power slowly diminishes, and you can see that the bears slowly take over the markets, which can be seen by the formation of rejection candles. The trend reverses and then continues in the downward direction for the medium to long term. This is how we can know that it is a reversal and not a retracement. Keeping the above points in mind, we can say that when a retracement occurs, there is no fundamental change in the stock since the down move was very short lived due to profit booking and selling activity. But on the other hand, in case of a reversal, we can say that there has been a fundamental change in the sentiment of the stock that causes a shift. For example, it could be some news in the market, it could be government policy, or it could be a managerial decision. But something fundamentally has changed for that stock, which is why there has been a change in market sentiments. Now, like we discussed before, that in a retracement, buying interest is still intact and it continues to propel the price in the same direction. There is also a way of remembering the terminologies. When bearish power is taking over, it is known as a bearish reversal, and when bullish powers are taking over, it is known as a bullish reversal. Early warning signs of a reversal. Now let's understand how we can detect these reversals in the market using certain technical tools such as candlestick patterns and various other things. In this case, we can use candlestick patterns as an important confirmation for trend reversals. In this case, you can see that there has been a bullish engulfing pattern that has just formed near a long-term support line, after which the price has rallied in the upward direction and has broken through another trend line. The other way of spotting a reversal early on is by looking for RSI divergences or stochastic divergences. Basically, divergences in indicators basically tells us that there is not enough strength or momentum behind the new price move that has taken place. You can see that in this case, when the price was over here, the RSI has reached this particular value, after which the price has continued to rally upwards, making a new high over here. And the corresponding RSI level has managed to only come to the level that it has reached earlier. So we can say that this price move does not have enough momentum or conviction behind it, which is why we can have a bearish outlook on it. We can early on get to know that the price is going to move in a different direction. There are also certain other warning signs, such as an exhaustion bar or an exhaustion gap. You can definitely look into these concepts as well. These will also allow you to spot reversals early on. Confirmation signals for reversals. A breach of important trend lines is also considered as a confirmation for a reversal. You can observe a long-term prevailing downtrend in this case, which is categorized by lower highs. A downtrend line is plotted by joining the lower highs that are formed by the price. In this case, a channel has been created, post which this particular downtrend line has been breached. And if you notice closely, there is a formation of higher highs and higher lows, which is a clear indication of an uptrend being formed. So when the trend line was broken, we have a confirmation over here that the downtrend has now turned into an uptrend. At the same time, we can also see another confluence factor over here. After the price has launched itself into an uptrend, it has then gone ahead to break a long-term support line, a long-term uptrend line that has been plotted from here, here and here. You can see that that trend line has been broken down, after which the price continues to rally downwards. At the same time, we can also see that there is another confluence factor over here known as the head and shoulder pattern. A head and shoulder pattern is a reversal chart pattern. Whenever we see this, we can expect the price to move in the complete opposite direction. So along with the breach of these trend lines, this chart pattern over here has given us a high confirmation. Earlier we had just a confirmation. This has increased the level of surety about the particular trend reversal. And if you notice, I have been showing you the diagrams for the same stock all throughout the slides, right from over here. You can see this is the same stock where we saw candlestick patterns. We saw an RSI divergence as well. We can see chart patterns forming. We can see different trend line breakouts. So these are certain confirmations of reversals that you can use. Chart patterns, candlestick patterns, trendline breakouts, moving average crossovers. Another way of identifying reversal confirmations is by using moving average, something known as a golden cross, which occurs when the 50 period moving average crosses above or below a 200 period moving average. Moving on, let's try and understand how we can create scanners for identifying such reversals in the market. These scanners can also be deployed live in the market so as to notify or alert you whenever the conditions mentioned in the scanner have been satisfied in the live market. Using the scanner, we are trying to identify or capture basically an uptrend. An uptrend is characterized by the formation of higher highs and higher lows. Using the period min function, we are trying to capture the lowest low that was formed somewhere over here. That is the lowest low that was formed in the 10 periods prior to the most recent 5 to 6 candles, which is why we have mentioned an offset of -6 over here. We are taking the lowest low formed somewhere in this period and comparing it to the lowest low that was formed somewhere in this period, which is why you can see a larger offset of -16 in this particular period min function. So let's head right into Streak in order to create the scanner. In order to log on to Streak, you have to log on to streak.zerodha.com and you have to sign in using your kite credentials. Let's head to the scanner section and start building the scanner. We will scan the stock on Nifty 500 because we want as many results as possible. Let's choose the time frame as 30 minutes. Chart type will remain as candlestick itself. So like I said, we are trying to define the lowest low that was formed in the 10 periods prior to the most recent 6 periods. And that particular lowest low should be higher than the lowest low that was formed in the 10 periods prior to those 10 periods, which is why we have an offset of -16. Similarly, we will add two more conditions in order to define successfully increasing lows. This is going to define an uptrend in our scanner. Let me quickly just complete these conditions and then we can move on to the last part of our scanner, which is actually identifying the breakout. You can see as and when we move further back in time, we keep increasing the offset so that we can capture the lowest low that was formed in that particular period. Low with an offset of -36. Okay, there are the three conditions that we have used in order to define an uptrend, which is characterized by constantly rising lows. Our last condition is going to be defining the breakout itself, in which the close of the recent candle should be lower than the lowest low that was captured in our initial condition. This is when a breakout will take place, a trend line breakout will take place. Let's go ahead now and give the scanner a name. This is a bullish trend line breakout scanner. Let's scan and save. Okay, these are the results that the scanner has fetched for us. I would like to choose one of these stocks and display them on kite charts in order to cross verify the accuracy of the scanner. So let's take, for example, let's go ahead with CDSL. Okay, I will now be matching the time frames. Okay, so the time frame is 30 minutes itself. Over here, you can see a very, very prevalent uptrend that have been constantly rising lows, and at the end of it, we can also see a trend line breakout. There has been a bearish move. This very well might be a reversal. Without even plotting the trend line, we can tell that there has been a trend line breakout. Let me draw the trend line to make it a little bit more clear for you. Here I would try to create the trend line by joining maximum number of lows. That is how you create a valid trend line. And over here we can see that the price has very recently broken down the uptrend line. So this is how the scanner can help us spot such opportunities in the market. And in fact, we can also make the most of these opportunities. Okay, our next scanner for reversals is candle formation near important pivot levels. So like I said earlier that we should look for candlestick formations near prominent market structures such as a long-term trend line, moving averages, support and resistance levels. In this case, pivot points do tell us about some important price support and resistance levels where buying or selling pressure could come in, which is why we are going to identify a bullish engulfing pattern that has formed near a pivot point support level. Let's head back to Streak and learn how to create the scanner as well. I would like to show you that very recently we have added 25 to 26 candlestick pattern scanners which are ready to be deployed live in the market. You can make use of various candlestick patterns over here, such as the hammer, the bearish engulfing pattern, three white soldiers, three black crows. You have a lot of options available over here. Even if you just want to see the reference for the code, the conditions that are required, you can also go check that out. You can use these candle patterns as templates in order to create an entirely new scanner by yourself. So let's go ahead and create a new scanner. I will be choosing the time frame as 30 minutes as the previous scanner itself. We are going to be scanning on Nifty 500. Now what we are trying to do here is we are trying to capture a candle that has formed at a pivot point support level. We are basically wanting a bullish engulfing pattern at the support level. So my first condition is going to be that the closing price must be higher than the pivot support level S1. And at the same time, my most recent opening price must be lower than that particular support level. So we are trying to find basically a candle that has just pierced through the support level. Okay, now we are going to write in conditions in order to define the bullish engulfing pattern, which is a very bullish candlestick pattern. It gives us an indication about the price moving in the upward direction. And when coupled with volume, it is an even better confirmation of a bullish trend. So in order to do that, the condition is going to be that my most recent closing price must be higher than the previous candle's open price. To define the previous candle, we will put in an offset of -1 and the closing price and the closing price should also be higher than the previous closing price. And on the other hand, our most recent opening price must be lower than the previous opening and closing prices. In this way, we have successfully defined an engulfing pattern wherein the open and the close of the previous candle are both within the true range of the current candle. Okay, we have now completed the conditions for our scanner. Let's give this scanner a name, pivot reversal scan. Let's scan and save. Okay, it seems to me like we have input some wrong conditions. Okay, that's right. Now I'm using Fibonacci pivot points for a smoother entry. They actually connect the pivot points together and take into consideration some more data points as compared to the normal pivot points. There we go. We have a hit. We have a result on our scanner, which is the LTI NSE instrument. I would like to cross verify the accuracy of this result. Let's quickly plot LTI onto our kite charts. Okay, we will also be going ahead and inputting the pivot points with the Fibonacci setting. Okay, there we go. So we can see that we have a candlestick pattern, a bullish engulf in front of us, and at the same time this bullish engulf has also pierced through the major support level, the S1 support level of pivot points. We can now expect an extremely bullish move in the market after this, especially after it has crossed the S1 level as well. This is how we can use the scanner, this amazing and powerful tool, to spot opportunities for us in the market. Moving on, let's understand how we can create strategies that can take full advantage of such reversals in the market. We are going to be creating a bullish reversal strategy. We are going to be creating this in a similar way as to one of our prior scanners. In one of our prior scanners, we were trying to define an uptrend, which is in turn characterized by higher lows. So using period min function, we defined these higher lows, and lastly we created the breakout condition with the close function. Now in this case, I would like you to imagine the opposite scenario. There is a downtrend, there is a long-term prevailing downtrend, and there has just been a bullish reversal. Let me just show you an example. In this case, you can see characterized by lower highs is a long-term prevailing downtrend. The downtrend taken support over here and then goes ahead and breaks or breaches this long-term trend line. After breach of the trend line, we can see that a new trend has been formed by the formation of higher highs and higher lows. The downtrend has been converted into an uptrend. This is exactly the scenario that we are trying to capture in our current strategy. So let's go ahead, let's head right to streak and create the strategy. Head to the create strategy section, wherein we are going to be setting the time frame as 15 minutes. I will be inputting the quantity as 100. Now, since we are looking for a bullish reversal, we expect the price to be in an uptrend, which is why we are using a buy position over here. I'm going to be defining a prior prevailing downtrend using the period max function. So just like we used period min, I am here going to use period max. Please note that we must switch to create plus mode to create the strategy, because the functions that are required to create the strategy are available in advanced mode only. So I will be inputting my first condition, period max high -6 should be lower than period max high -16. You can see that even the offsets and the periods that we are using in the function are extremely similar to the scanner that we created. For simplicity purposes, we have kept it this way. We are trying to create the opposite scenario over here. Period max high -16 is lower than period max high -26. Okay, let's proceed to the last condition that is required to capture the downtrend. Period max high with an offset of -36. So using these conditions, what we have done basically is that we have successfully identified a downtrend. We have searched for highs over here. For example, we have searched for the highest high somewhere over here. We have compared it with the highest high somewhere in this period. We have compared this highest high with the highest high somewhere in this period. And lastly, now we will be conditioning our strategy to take into account the trend line breakout as well, which I will be inputting right now. The close must be higher than period max high -6. So this particular condition is going to factor in our trend line breakout as well. I'll be inputting stop loss of 1, target profit of 2, so that we can maintain a moderate risk to reward ratio. I would like to deploy this strategy on CNC. This is a CNC strategy. We will let remain the chart type as candlestick only. Let's go ahead and run this particular backtest on a bunch of banking stocks that I have for this particular strategy. We can name the strategy something like bullish reversal demo. Okay, let's go ahead and backtest this strategy. Now, okay, so if you would like to edit or you would like to alter any of the nitty-gritties regarding your strategies, you can do so by clicking this button over here. You can change your quantity, stop loss, take profit, candle interval, chart type, etc., etc. You can change all of these small things regarding your strategy from this button right here. In case you wish to change the conditions of the strategy itself, you can do so by pressing this edit button over here and then rerun the backtest. Our backtest results have loaded up. This is our backtest profit and loss figures. This is the profit or loss that your strategy would have incurred for you if it was deployed in the backtest period. So we have received a return of close to 15% in the past 3-month period, a return of 10% in the past 3-month period. Pretty good returns this strategy is giving us. Our signals are good. Our win to loss ratio is also good. The max drawdown is basically in simple terms, it is a measure of risk. There are two ways to optimize it. We can optimize it by keeping it minimal. We want our risk to be minimal. As you can see in this strategy, we have 0.5% risk for 10, 15, and 5% returns, which is a very good risk to reward ratio. We have a 1.25% risk for 6%, which also is quite a good risk to reward ratio. Our winning streak and our losing streak, on the other hand, tells us about how many trades back to back have been won or lost by the strategy on a particular stock. Now let's head back to streak and let's learn how we can create a strategy for a bearish reversal. We just created a bullish reversal strategy. We will now be going ahead and creating a bearish reversal strategy. This strategy is going to be created by purely using technical indicators. So let's head back to Streak and create this particular strategy as well. This is an intraday strategy, so we will be making use of the 5-minute time frame. Let's keep the quantity as 100 only. Okay, great. Earlier we ran the back test on banking stocks. I would now like to run the back test on a banking and finance combination basket that I have available. I will be using the RSI, the MACD, and the 200 period moving average to create this particular strategy. So pretty much in the opposite way as compared to our earlier strategy, which was a bullish reversal, we are now looking for a bearish reversal, which you can see over here. We are going to use technical indicators to identify such a condition and take trades based on it. So my first condition is going to be that RSI indicator must be higher than the number 60. Also, everyone, please note, since this is a bearish reversal strategy, it has a prior prevailing uptrend and then it goes downwards, which is why we want the position to be a sell position. My next condition is going to be that the close price must be higher than the 200 period simple moving average. Yes, this is extremely important as the 200 period moving average is considered to be quite an important indicator or moving average by traders worldwide. You will see a lot of reversals and a lot of buying or selling activity taking place near this particular moving average, be it an EMA or an SMA. It is an extremely important indicator. In this case, using this condition, we have checked that the price is in an uptrend because it is above the 200 period moving average. And at the same time, the 14 period RSI is higher than 60, which defines that the price move, the current price move that is going on, has a lot of conviction behind it. It has some strength behind it. Our last condition is going to be the one that sort of denotes or indicates or triggers the breakout of the trend line. So here I will be putting in MACD crosses below MACD signal. So this is a sell-off MACD signal. Whenever the MACD line crosses below the MACD signal, it is considered to be a bearish indication. So using the above two conditions, we defined a prior prevailing uptrend, and now we have defined a change in the market sentiment. I'll be inputting my stop loss as 1%, target profit as 3%. Okay, great. In the advanced section, I will be changing candlestick to Heikin-Ashi because this is a Heikin-Ashi strategy. We will let the order type remain as MIS because this is an intraday strategy. Let's now give this strategy a name. This is a bearish reversal. I would now like to save and backtest. Okay, so there we go. Our backtest results have almost loaded up. We have good profit figures except for this stock. Now, as all of us as traders are aware that not every strategy works on every stock. There will always be some stocks that perform poorly on a particular strategy. So we can see that we also have a desirable risk to reward ratios. We have 1:2 risk to reward ratios over here. And you do not have to blindly trust the backtest profit and results that are shown to you. Our transaction details are extremely transparent. You can yourself go ahead and cross-verify each of these transactions that have taken place during the backtest period, and only then go ahead with deploying your strategy in the live market. You also have the option of adjusting your profit and loss for brokerages. This is going to give you an even deeper and more accurate understanding of the profitability of your strategy. Now, naturally, I would choose those stocks that have performed the best on my particular strategy. So I will go ahead, choose these three stocks, and I will deploy them in the live market. Now, before you deploy a strategy in the live market, you will receive an option to adjust the quantities stock-wise. So you can choose to deploy 50 in this, 75 in this stock, and 100 in the other. It's up to you. You can choose how many trading sessions your strategy is going to be live on. This option is available when your order type is MIS. The strategy cycle is basically the amount of trades you want your strategy to take on any one particular stock. So if I have a strategy cycle of 5, my strategy is going to execute 5 loops, and one loop is one entry and one exit condition. So it is going to execute 5 loops on each of these stocks. Now, before you take the strategy live, we have another layer of filtration, another layer of surety available for all of our users. Say you have backtested your strategy, you are satisfied with the results. You can then go ahead and paper trade your strategy. The purpose of paper trading is basically to simulate an experience that is similar to live strategy deployment. So you can deploy your strategy on live market data, but none of your real capital will be affected. It will only show you how your strategy is performing using a virtual currency. So you can go ahead, backtest the strategy, paper trade it, and only then decide to take it live. In this case, I'm taking the strategy live now. Once taken live, you will find it under the live strategies section under strategies. Let's go ahead and stop these strategies for now so that they do not disturb the flow of the presentation. So it is now time to conclude this webinar. We have reached the conclusion of this session in which I would like to highlight for you all certain key points, certain important points that you should remember even after watching this webinar. The first one is that knowing about trend reversals can allow us to enter new trades and exit older trades quickly. So basically, reversals tell us about the end of a prevailing trend and the start of a new trend. So they can really give us a lot of information which can help us timing our entries and our exits both in buy and sell positions. It shows that the price direction of an asset has changed from going up to going down, or from going down to going up. So as we discussed earlier in the webinar, when there is a prior prevailing uptrend and it reverses and start moving towards the downside, it is considered to be, or it is known as, a bearish reversal. Whereas if there is a prior prevailing downtrend which reverses and starts making an uptrend, it is known as a bullish reversal. Early warning signs should be confirmed by using confirmation methods. We looked at a few warning signs such as candlestick patterns, RSI divergences, which are going to tell us early on whether a reversal could take place. Post which we will be looking for some confirmations in the price, that is such as moving average crossovers. We can use major trend line breakouts. We can also make use of chart patterns in order to confirm our change in market sentiment. Patterns as well as indicators can be used to identify and trade reversals. We created a strategy which was purely made out of indicators, which was a bullish and a bearish reversal, which was a bearish reversal strategy. Scanners and strategies should be developed to take advantage of such moves. Using streak, we can use various scanners, various strategies. We can deploy them in the market and take complete advantage of reversals, capture the largest price moves. So thank you all. It was a wonderful experience conducting this webinar for you. You'll have been a great, amazing, and patient audience for having been tuned to the webinar right till the end. If you have any questions or suggestions regarding Streak platform or the webinar itself, then please feel free to write to us at support@streak.tech. Me and my team will be more than happy to answer any of your questions and solve all of your doubts. You can also follow us on Twitter. Our Twitter handle is @StreakTech. We will be posting any releases, new features, updates that are rolled out are posted on Twitter as well. We also have a rich collection of streak related content on our YouTube channel, which you should pay a visit to. The rest of the videos on the channel, we have scanning videos, we have videos on how we can create basic strategies to advanced scanners. All of that content is available for you. For those of us who have for the first time come to the platform, who are visiting Streak for the first time, do make use of the free demo box that is available over here. You will be asked for your phone number, post which we will be booking you a slot in our upcoming live demo sessions, where a detailed demonstration of the platform right from the beginning to the end will be given to you. So we will be ending this webinar. This is all for today. Thank you so much once again for being a great audience. Have a good day, stay home, and stay safe.